It has been quite the ride on stock markets, of course, in the wake of Donald Trump's tariffs for the past couple of weeks. Giant moves down, followed by giant moves up. It didn't last as long. And then we saw this week literally one day down, next day up, one day down, next day up, and today no exception. Big run up yesterday, though. And then markets looked like they were on fire coming out of the gate on the Dow. It was up at one point about 1,000 points. As we speak now, it's up about 350. So it's been falling off all day. How do you figure out what's going on? What do you do next? We wanted to check in with Arnie Zwaig, portfolio manager, of course, who, by the way, is a regular here on CJD. You can join him every morning with Andrew Carter as well. Arnie, thanks for taking the time. Appreciate it.
Always fun talking to you, Aaron.
So let's get into it. As I said, I guess the one keyword, you don't have to be a market genius to sort of look at it and go, I've never seen things this volatile. You've been doing this for a long time. Have you?
Well, I have seen volatility, but this is man-made. It's made by one man, and it's really hard to keep track as to what is going to move the market next. So if we take a step back just to Monday, and we see that the sell-off was really based on President Trump commenting on how bad a job the Federal Reserve Chairman was doing, and how he should be eliminated and dropping interest rates and such. And so the Dow closed down significantly yesterday. The Dow closed up over 1,000 points, and the Nasdaq regained everything it lost on Monday, jumping 2.7%, and that was based on the fact that the Treasury Secretary commented on, or was hinting on the fact that there's going to be an easing of the U.S.-China trade tensions, and that neither side sees that the status quo is sustainable. And, so that was where we saw some of the rebound. And then last evening, President Trump came out and said he had no intention of firing Jerome Powell.
Arnie, let me stop you right there. So here is, as you're alluding to, here is President Trump now on the China tariffs, which we know were at one point, they kept going up and up and up, I think 145%. Then, I don't know for how long the 245% was in play, but let's go with the 145%, which in and of itself was gigantic. Now, of course, he says this.
145% is very high, and it won't be that high. It's not going to be that high. It got up to there. We were talking about fentanyl, where, various elements built it up to 145. No, it won't be anywhere near that high.
And what level do you think it'll come down to if you haven't?
It'll come down substantially, but it won't be zero. It used to be zero. We were just destroyed. China was taking us for a ride, and just not going to happen. It's not going to happen.
Okay.
We're going to be very good to China, have a great relationship with President Xi, but they would make billions and billions and billions of dollars.
Enough. I think we get the idea. Okay, so Arnie, there you go. It's not going to be 145%. Look, let's be honest here. This sounds like Donald Trump is backing down, although he'd never admitted. What's your take?
Well, it's funny. There's a clip that he said he would be very nice in negotiations with Beijing in the hope of securing a trade deal. Look, if this is the art of the deal, then, people are going to write a lot of books about this in hindsight and question, whether this was brilliant negotiating or just, absolute silliness coming out of Pennsylvania Avenue. The bottom line is that when we bring it all back to our own personal savings, and the volatility and the uncertainty certainly is weighing on certain of our listeners. And we have to remember, though, Aaron, that volatility is always been around. Historically, we've experienced downturns of 5% many times a year, and a correction of 10% every 10 to 12 or 14 months, and a 15% correction every 3 years. So if we look at what's happened year to date, we've given back some of, not even all, of last year's rate of return. So, of course, it's difficult on the nerves, and it's difficult to watch day to day and to hear, but those people who are properly balanced and in their portfolios and understand the risk that they take are doing okay.
But with respect to that, and yes, that's how the market works, I get that part, but typically it's because of things like a financial crisis, a run on banks, that kind of thing. It's understandable, or earnings are all bad. This is one guy with tariff policy basically moving markets.
That's right. And that's exactly what it is. And we don't know minute to minute what he's going to say, whether it's in the Oval or on Air Force One or on a golf course. So this is going to be a very volatile, or continue to be a very volatile period, at least until the midterms. Uncertainty is going to be a constant.
So do you tell, and not asking what your advice is to clients specifically, but with respect to people looking at this who may have money in the markets, would the advice generally be, you know what, don't look every day because it's been hard if you have been, and come back in 6 months and a year and things will get back to normal? Can we even expect normal to come back?
Well, it's going to be a new normal. It always is a new normal if the markets get recalibrated. But I would say this to our listeners. If you haven't stress tested your portfolio, now is a great time to do it. Reassess the risk appetite that you're prepared to take. Don't ignore it. Just rebalance your portfolio if you're having sleepless nights or tummy aches, because you're invested for the long-term growth in the portfolio, for the dividends and interest that are you live off. And like I said, so far, year to date, we've just given back some of last year's returns.
Look, I remember during Trump's first term, right? He would stand on the White House balcony there and look at the markets and go, look at the Dow and see how high it's gone. And I think just a while ago, maybe a week ago, I think I read a quote where he suggested we're going back to 50,000 on the Dow. As crazy as that might sound, there are people, though, everyone's in a different situation, right? Some people can afford to let, it sit and wait for years before they need the money. Other people, of course, are counting on this money now. So is the idea that if you want to get this money out sooner, rather than live with the indecision that's in this market, because we don't know how it's going to change based on what the president says from day to day, get out and realign your portfolio, or just ride it out?
No, I think that you always have to look at your asset allocation, understand your cash flow needs, and the portfolio has to represent that. So it's always is obviously always looking at what your short and midterm needs are and make sure the portfolio is able to produce that.
So do you have people calling you panicking, or have you had that over the past couple of weeks?
Well, fortunately, my partner and I, we raised cash. We're sitting on a good amount of cash in our portfolios, and we're looking for buying opportunities because opportunities will present themselves. And we're getting more phone calls asking when's the right day to buy, actually, rather than sell.
Are we at that stage yet, do you think, where those opportunities, companies that have taken big hits, 10, 15, 20% in some cases, are worth taking a whack at now?
I don't believe so. I believe that there's going to be a lot of noise between now and July, and we will, I hope not, but I do expect to see more downside risk. So I would rather buy when I see some stability in the markets, and I would rather pay a higher price in when that moment arrives rather than getting a better deal today.
Okay. I'm going to ask you just one question, and that has to do with Canada and stocks here. So Lululemon, which is a Canadian company, right? But we know that a lot of their manufacturing is over in Asia. They've been killed. This is a stock that was about $400 a year ago, over $400 then. It's $265 today. Is that enough of a reason to go in, or do you think you still wait and be cautious?
Well, I'm about being cautious. I need to see some type of recovery in the business. And the truth is, Lulu, as great a story as it is, it's never been in my portfolio. It doesn't produce the type of cash flow that I need from my clients.
But these sort of companies are going to be still hurt, I guess, by the whole idea of tariffs on Southeast Asia, on countries like China. You just stay away.
There's no reason. At this point, there's no reason to stick your toe in.
Okay, got it. Arnie, I really appreciate it. Thanks so much.
Have a great afternoon, Aaron.
You too. Arnie Zwaig, Portfolio Manager, Senior Wealth Advisor as well.